Hmm. Isn't the market closed right now? Ah, that's a funny question. What's the way to stream? What's up, brother? This is backtest, brother. This is not live trading. Backtesting? That's what it says. Drinking a ginger ale. You have Instagram? Yeah. How's the weekend? Weekend's good. Appreciate you for asking. Hmm. Model you backtesting? We're backtesting, it's not really a model. We're just backtesting ICT's uh, advanced theories. Apologize for being late. Brother, I just started one. I didn't even start yet. You're going to explain what ICT mentioned yesterday. Didn't understand it too well. I'm going to be backtesting it. Does that count? Feel myself. Backtesting premium and discount inefficiency grading. What you backtesting though? Premium and discount inefficiency grading. Use Tradeful? Nah. Nothing compares to TradeZella. I'm gonna be honest. Nothing compares. TradeZella's the best by far. Couldn't sleep last time. My girl's getting worried. Oh, bro, I feel you, bro. I was up till 4 a.m. last night. You're gonna explain what ICT mentioned? I mean, I'll use it. Why are my candles on TradingView more laggy? I have no idea. Send me a message on Discord. What's good, Kiddis? What's good, Pierre? That live was great, yeah. Are you just backtesting this previous week? No, this is 2023. Good, Percy. I already studied it last month using these concepts. Have to go back 2023. Good, Ollie. Gonna wait till like 1 and then we'll start. What difference TradeZilla from Forex Replay if I can collect most of my data on my own through Notion? The main difference is between those two is one, you can journal on TradeZilla very, very effectively, and two, you can use second intervals so you can actually watch the candles print. Yep, chill backtesting session. The lecture was good. I only saw the. Yeah, all his lectures are good. Yo, out of all trading streamers, I put you on number one, bro. Oh, appreciate you, bro. You watch every ICT stream, of course. Just learned how to liquidity sweep in the market. It actually works really well. Up 5 kills. Whatever that means, sure. Cool. For silver bullet strategy, should I use a retest of a 1 minute FEG or 5 minute FEG? You'd probably find more consistency with 5 minute, but that question is pretty. The question doesn't make sense. You use the one that aligns with time, and that offers good risk reward. When are you going to start? In 1 minute. Just learned how to liquidity sweep. Nice, bro. Learning about liquidity is key. Okay, let's get started. So we're gonna try to mimic what ICT was teaching. Yep, I already have DXY open. If you can only see this chart, I highly recommend you either move your phone sideways or you just come to YouTube stream, because you're not going to be able to see the right half of my screen, which has the S&P 500 and the dollar index, which is going to be crucial. ICT was talking about 20-day lookbacks. So let's start here on the Friday. So we have 1, 2. The easiest way to do this would actually just be to measure 20 bars. So this is your 20-day if the look back. Some of you are not going to understand what I'm talking about. That's fine. This is your highest high and lowest low in that 20-day range. Now we want to do the same thing for the S&P 500. I'm assuming it's going to be the exact same highs and lows. It should be. Actually not. There's an SMT there. Interesting. And then we'll do the same thing for the dollar index. Interesting. For the dollar index. See, on this dollar, because it's trending, we may want to do a 40-day look back. And I think that would be something like this. Although we just continuously make lower lows. No, that's even that 40-day look back would be here. Okay, this is the first step. It's good. Oh, live? I usually just swap around with dollar. Oh, this guy commented, markets closed, fake. That's the most unprofitable comment I've ever seen, ever. Can you explain what you're trying to do? Okay, right now we're looking at the last 20 days, and we're using the last 20 days range to help frame high probability setups. What kind of drinking out of a can method is that? I always do that, bro. Yeah, I'm weird like that. That's funny you said that. Anyway, that can is empty. Okay, 20-day look back on the daily chart. We're in a discount. We want to see, obviously the market's bearish here, and we're not trying to pick a bottom. I'm going to mark out sell side here, and we'll keep that annotated as Friday, November 4th low. I think this is just November low. Yeah, just November low. So we'll keep that annotated on the chart. So we're bearish. Okay, we're bearish, obviously. We're inside a discount of the 20-day if to look back. What's good, Cammy? And we have sell side here. And these are relative equal lows. This is where we are right now. We're not trying to pick a bottom, but we are trying to find high probability longs. If you notice, dollar is also bearish right now. So we could see a retracement. This is 2023. We could see a retracement because dollar has been moving lower. So somewhere in here, in my opinion, somewhere in here is where we're going to find our best setups. Again, I don't want anyone to think I really know what I'm talking about. This is me testing it. I literally just learned this from ICT yesterday, and I did test. What's the asset on the larger screen? This is NASDAQ. You can see it up here. Then we have the S&P, and we have the dollar. Okay, so I'm going to transpose. Let's go to an hourly chart first. And let's extend this. We're going to extend this out in time and just leave that. This is our 20-day IPTA look back quadrants. And let's skip to, I guess, do we want to do a trade back test or do we want to do a study back test? This is recorded on YouTube. You guys want me to take trades and test with trades, or do you guys want me to just study? Trade. Trade. Take trades. Trade. Both. But we will do both for sure. Okay. Okay. Did I just... Okay, so it's Tuesday. We're working in that 25% quadrant, and we have the inefficiency in here. Dollar also moved up. This could potentially set the stage for lower prices. Remember, our main draw is here. We hit the 25% on all. So it's not really a risk-off market, to be honest. Dollar looks pretty inversely correlated. I'm using TradeZella, but we'll see what we can find here. So we have the buy side here. This is going to get kind of difficult, but I guess we'll figure it out because, okay, we have buy side here, and this is what we're going to do. Okay, this is what we're going to do. We're going to mark out these wicks. Again, I don't want anyone to just assume like this is not how I trade at all. We're kind of just taking into effect what ICT taught. We're going to mark out those. We're going to mark out, I think let's start with this, and then I'm going to mark out this one. Okay, let's start with just this. Because we're going to have to see a run on buy side anyways. Which is here. This is going to get difficult, to be honest. This is going to get quite difficult, but it's fine. So we can clean up the chart here. Also, where's my marker? Wait, why does it say ES? Okay. I'm going to mark out this wick because specifically we're looking for that high as a draw right now. So we're inside the quadrants of the wick, and we're inside the 25% quadrant of the 20-day if the look back. 1 minute chart, we're working inside those quadrants. It's not even 9:30. Let's go to 9:30. And I'm guessing like right now we're going to be looking for a long, targeting the equal highs and that full quadrant. Although, we'll see. Okay. This is going to be a difficult test. I'm going to mark out this. I'm going to watch price. Didn't trade to it there. I'm going to mark out this. Trades to it there. Let's keep that annotated. Yo, this is getting complicated. Market's closed. This guy's a course seller. First of all, I don't sell a course. I don't have a course. I don't sell anything. Second of all, this is backtesting. Yeah, this is gonna get complicated. All right, we're gonna have to make all of this one like gray, and let's make all of this one red. And we have to flip that. Okay, so basically, we came down. The bodies respected the low. We closed above. To me, this looks like a pretty good long. For simplicity's sake, we're just gonna 1 micro every single trade. I'm not here to practice risk management or anything. See this inversion fair value gap? This inversion fair value gap specifically, it overlaps with the quadrant level. So to me, this looks pretty golden. Like I would say this is A+. The inversion fair value gap overlaps with the quadrant level, exactly like ICT taught yesterday. Right, see right across that 50% and that 0% level. And we have a nice draw in the wick high, which is also the relative equal highs. And it's inside the 20-day if the look back. We're working inside that upper quadrant or lower quadrant. And I think this is a good trade. Has anyone here actually watched the last ICT video? Okay, we lost. We don't get to the high there. Interesting. We do take out this high though. What are the bodies? The bodies get above 75. Again, you would expect this to be a high probability fair value gap too. But it also... I'm going to be honest. I mean, we never invalidated that fair value gap. And in fact, if we get an inversion here, this one also overlaps with the quadrant level. I think let's focus on... I mean, these quadrants are basically overlapping. I want to keep them both annotated. That's an order block, doesn't overlap. We get the run on sell side. To me, this looks very bearish now. This inversion fair value gap would also overlap with the quadrant level. That order block overlaps with the quadrant level. Nothing about this looks bullish at all. This was a nice run. We don't get to the high. We engineered the equal highs. Did ES take it? ES did take out those highs. Interesting. I want to see here. Interesting. Interesting. I like this wick. I like this wick. The thing is, like, how am I supposed to? How are you supposed to end? How am I supposed to annotate this one? And like, it's too late now. You know, it's way too late. Like, okay, so we're looking at this wick. It's too late. Like, I was looking at this one. By the time I realized this one wasn't the one being used, this one. I mean, this one looks really nice. The deliveries, the perfection is there. This fair value gap overlaps. You see how the breakaway forms. No, you don't have to use the 5 minute. That's nonsense. You know what? I guess what we could have done is go back to this wick and see was it respected before. You know? Here, the body stop at 50. I guess that should be a criteria for us. Maybe we should test it like that. We have to go back and see which wicks were being used. That way, we know which ones. No, I'm not trying to turn on interval. I'm trying to develop a criteria to selecting the wick beforehand. That's what I'm trying to do right now. And it's not easy. There's a lot of wicks in here. See, like, to me, this looks messy. I don't know how effective this is. We may just have to focus on opening range gaps, bro, if I'm being honest. I like this one right now. So we'll keep this annotated. Now let's look lower. Let's look lower. Let's use this wick. Whoops. Let's look at this. Let's go to the 5 minute chart and look at this. The low gets set. It gets used there. That fair value gap overlaps. This fair value gap overlaps. Okay, this one looks pretty good. Come down, we take the lows. This does not overlap. Low probability. I don't want to learn QT. We'll keep this graded for now. No, he did not say use the longest wick. But there's so many wicks. Look how many wicks there are on the daily chart here, bro. How the fuck am I supposed to pick one? And he said to use a 20-day if to look back, which means we have to use everything in here. Bro, there's like 19 wicks that are overlapping right now. Makes things difficult. Makes things difficult. Like, this makes things almost impossible. We're going to mark every single one and see which one's being used. By then, it's probably too late. I like this. We got to develop some sort of... And then you can just go to the 5 minute or the 1 minute and see which one's good. I guess. If the levels are being... That's something, there's so many. No, not bad PA for this strategy, no. Okay, we know one thing for sure. I'll say one thing for sure. We want to use the wicks that overlap. And I guess we should have been looking for shorts because I did say this is a more bearish market. But we want to use the wicks that overlap with the quadrant levels of the 20-day IPTA look back. Which means we want to focus on something in here. But there's 1, 2, 3, 4, 5. This one has a CE that overlaps with 25%. I did mark the quadrants. He did not say use the wicks that are longest. That is not true. Okay, this one looks relevant. Okay, this one looks really relevant. I say that because the low gets put in there perfectly at the 75% level. Alright, we'll rock with this for now. So we're going to look for an institutional order flow entry drill with a high probability fair value gap. This one, with like, see, like if I just mark out another wick, then that's a high probability fair value gap. Like what if I mark out this one? Does it overlap? Not really. So this is a low probability fair value gap. All right, what about this one? And bear with me, guys. This is getting hella messy now, but it does not overlap. Oh my god, but there's so many wicks I can mark here. All right, we're just gonna mark them all. We're just gonna mark them all and see if it overlaps. Okay, this fair value gap does not overlap with any wick. We're literally just gonna mark them all, bro. And we're just gonna wait for an overlap. Okay, that one overlaps. This is good. I think we gotta focus this price action here. This is the best. I'll tell you why this one is the best. Like, I think this is our main focus. Because one here, like, you have to also align everything else. We're going into 950 macro with the 930 Judas swing. This one is so nice because it overlaps with the 25% quadrant level. Like, I think this is such an... This one is not ambiguous. This isn't like mark every single one, see which one falls. This one is very obvious because it overlaps with the 25% quadrant level. So let me do... Now, I know this is so messy, but just bear with me. Which one has an overlap? This one overlaps. This one overlaps right on the 25% level. Yo, this one, this cannot be a coincidence. This one cannot be a coincidence. This one overlaps right with the 20. Overlaps right with the 20. Everything in here is really nice. This fair value gap, that's your institutional order flow entry drill. This is the one we should study. And it overlaps the 0 of this one. ICT did say something, by the way. Like, a lot of the times, the wick quadrants are going to overlap anyway. So you can really just pick one a lot of the time. Okay, I'm liking this one. This has a 25% quadrant level overlapping right there. So let's lock this one in. All right, we're working with this. I like this because the order block overlaps. There you get a tap. This fair value gap overlaps. It also gets a tap. Okay, so which one is this one? So we're marking out this. Friday, December 23rd. And you know, it would kind of make sense. You know what we should have done? Why didn't we mark out the bearish fair value gap here? I'm tripping. We should have marked out the bearish fair value gap. I know this is probably like so boring for some of you guys, but you know what? If it's boring, just leave. This is what we're going to be studying. Oh, guys, that's clean. Guys, that's clean. The daily bearish fair value gap. Look at those quadrant levels, man. That's clean. That's really clean. We go up 930 Judas swing. We trade to the high. Look at the body. Look at the body. Nah, that ain't random. No shot. Look at this body. It opened up right at the consequent encroachment. Goes straight to 75. Stops right at the 75. Goes to the 100 plus 2 ticks. That's a mohawk. And that inversion is clean. Why is this inversion clean? Yo, okay, hold on. This is going into the journal. Hold up. This one is going into the journal. And I'm gonna explain why. So listen closely. Look at the confluence here. This black line right here, listen closely, is the 25%, the lower quadrant of the 20-day IPTA look back grade. Okay? It overlaps right there. It also overlaps with this inversion fair value gaps consequent encroachment. On top of that, the daily bearish fair... Remember, this market's already predisposed to go lower. Remember that. We already annotated this November low and here. So, this is the daily bearish fair value gap. Why would you use this fair value gap? Because it's right there on the 25% quadrant. I already said in the stream, the setup's going to form somewhere here. Like in that quadrant level. And it's right there. It lays right on top And what we got to do here is let's make this a slight red. So we got a journal. We're going to put this in the journal. I just want you to look at the level of precision here. The market Judah swings higher when we're already predetermined bearish, right? We go up, touch the high of the SIBI. Bodies respect 75%. That's very telling. The 50% of the SIBI overlaps right there. 25% of the opening, 25% of the 20-day IPTA look back right there. This inversion fair value gap also overlaps right there. That's precise. I like that. And obviously that sets the stage for our very beautiful order block here and our very nice institutional order flow entry drill. So this is going into the study. I'm going to be honest. I'm kind of surprised it didn't take out the high here. That's where things go. That's where things lost me. But I think if I marked out the daily SIBI and then I saw this, how do you know? Because the bodies are telling you that it's not, you know? The body's telling you. Someone said, can you go to the hourly chart? Here's the hourly chart. There's also a SIBI in there if you want to get fancy with it. There's a daily SIBI in there. You can watch that. You can see the bodies in there too, although it's not that clean. You can also grade the quadrant that market maker sell model in each stage would be at its quadrants. Yeah, he did talk about that. So I think let's rock with this. Let's go with red. Let's go with blue. Okay. Okay, so we're going to annotate this. This is how you journal this. This is what I did with ICT 2016, 2022, 2023, 2024. So this is the daily SIBI quadrants. And you know what I'll do? I'll just match it with blue. I'll just make it blue. The same blue. So daily SIBI quadrants. And then you have the 20-day. You got the 20. I'll just say IPTA. We can just say IPTA quadrant, I think. 20-day. Let's just say 20-day IPTA. So this is for the journal. 20-day IPTA. Daily SIBI. Like this isn't like a random level. This is a daily bearish fair value gap that slaps right on top the 25% level. Look at that, like, and then you get this inversion fair value gap. Where's your first presentation? Now that's what I want to see. First presentation, you could argue it to this one. I would probably say it to this one as well. Now what I want to see, is I want to see. I'll tell you what I want to see. As soon as this first presentation gets put in, I want to see the consequent encroachment, and I want to see which wick overlaps with 50%. Which one has a quadrant level that's overlapped? Not this one. Whoops. And here we'll go with quarters. This one right here. This is the one. This is the one. That's an overlap. Now let's watch this. Oh, that. Oh, does that really overlap to the tick? Hold up. I must know. Ah, it doesn't. That would have been so fascinating. Anyways. Okay. We come through down the quadrant. Inverse. Respect. Go higher. Oh my goodness. Wait, it also... Wait. It also overlaps with the daily SIBI. Interesting. That's probably something we should use going forward. It also overlaps with the daily SIBI. Oh, and did it get touched right there? Hold on, let me make sure I'm annotating this crazy. So this wick is important because it overlaps with the daily SIBI as well. What I mean by overlap, I mean it's touching. So look at the purple. I'll remove the blue for a sec. See this purple wick? It overlaps with the daily SIBI. That's the wick right there. That's the low of the wick. The 75% level of that wick overlaps with the daily SIBI. It's right there. It all on the same stack. See how they're stacked up? So I'm going to make an annotation in purple. And I'm going to say, what day was that? So this was December 20th. This is going to be posted on live. This is going to be posted on YouTube. This is a good study. I know this is taking long, but I think we're starting to build something here because we can start looking at the levels that overlap, and those are probably the ones you want to use. So we want to go with December 20 premium wick overlaps daily SIBI. And remember, we were already bearish going into the day, and I think that's what we should have probably focused on. But again, the main goal here is to just take the trade. So okay. And then I think we'll leave that. So we have 20-day IPTA, daily SIBI quadrants, and then you have a very nice first presentation fair value gap that overlaps. I extended it to the right for some reason. Like, I don't think it's a coincidence that it overlaps with the first presentation fair value gap and then also overlaps with the daily SIBI. Yeah, if you're on TikTok, you should come to YouTube because you can see the full screen. Okay. So you can see that overlap. And then you see the first presentation. And we'll make that blue. Okay, so we can now put this in the journal. And I suppose we can play it out now and just see this inversion fair value gap. I'll just slap this IATG overlap. Okay, and then we'll just leave a little text here that says 930 Judas swing higher in a bearish market, right? Trades to daily SIBI. Note, look at bodies, at quadrants, wick overlap of December 20 with daily SIBI, plus first presentation, FEG CE. And then you have, where's your institutional order flow entry drill? Oops. Did I just delete all that? Did I just write all that and lose it? Fuck. That's so annoying because I never clicked enter. You also have an institutional order flow entry drill right here. Look at this fair value gap too. This is a high probability fair value gap according to ICT, right? High probability FEG. I'll annotate that. Let's make it go. I think let's make this blue. That's a high probability fair value gap. This is a high probability fair value gap. Okay. This is a good study. This is a really good study. And we'll make this some light orange or something. High probability fair value gap. Why? Because it overlays right on top of that quadrant. High probability fair value gap. Why? It overlay. We get two institutional order flow entry drills right here. Institutional order flow entry drill. So institutional order flow entry drill. And we were looking for this at the time when we were watching the tape, but we did not know which wick to use. This wick makes sense because it overlaps on top of that SIBI, and it was used perfectly right here. Look at the bodies there. Look at the bodies here. That's clean. I don't think that's random, but we'll have to do more testing. Institutional order flow entry drill, institutional order flow entry drill, and then we'll put a final note here, and we'll take a picture of this. So daily SIBI in a bearish market, obviously. Look at quadrants after 930 Judas swing. And let me make this not bold. Make this clean. Yeah, good. Okay. Then you have December 20 wick overlaps with daily SIBI plus first presentation FEG CE. This wick also provides the 2 institutional order flow entry drills, IO feds. Likely the wick you want to use. Because of the overlap. On top of that, 950 macro delivers a beautiful move. And I don't think there's anything else I would want to say here. Oh, this all overlaps on the 20-day IPTA look back 0.25. Entry at IFG that overlaps daily CBCE plus 20-day IPTA 0.25 plus December 20 premium wick. Where's the 75 level? Right there. Yo, that's strong. Yeah, this is strong. Some strong stuff right there. So the purple, if the look back, CB quadrants, IO fed, high probability fair value gap, high probability fair value gap. Pretty much exactly what ICT taught, man. I'm gonna be honest. And I suppose, so what I'll do is I'll take a screenshot of this. I like to do screenshots manually. Let's download that image. And I can label them later. Okay, that's a good study. Let's watch the tape now and see. So we can clear this up. We already got the screenshots. This we can probably extend in time. And now, remember, we're looking for a run to the low here. We'd probably want to grade this now that we're working inside that. So I'm going to grade this in blue. And we'll go for the whole day here, man. I mean, there's no... Looks like a textbook day that's not being manually intervened. So we'll look at the blue, look at the red, and we'll see what we get. We'll wait for the right time. So let's wait for a retracement and lunch. That's a pretty shallow retracement. No overlaps. Maybe we wait for PM session. I'm just trying to watch the tape here and see, like, remember that 0 level. Wait, what are we aiming for? Oh, we hit the daily low there. Oh, so we probably should have used the blue. We probably should have used the blue. Let's go back and study the blue quick. Yo. That's a high probability fair value gap. That's a high probability order block. Hold up. We get to the high there. I mean, do the bodies respect? Pretty much. I'm sure if you went to like a 2-minute chart, it's probably really clean. 5-minute chart's really clean. That overlaps with the quadrant level. Yo, the 5-minute chart is clean. The 5-minute chart is clean. Look at the bodies there. Ooh, that's nice. That's a high probability fair value gap institutional order flow entry drill. You just need to know where the market's going. And we already knew it was going right there. So let's add this to the study and then we'll call it. Okay. We'll move on to the next day. So we're using this as a premium wick. So let's do it like this. So first things first, we see the lunch retracement. Yo, it's also really about time. This high probability fair value gap delivered at 1150 macro. So macro. Probably getting a lot of questions right now. I ask for IPTA. What does that mean? And I guess I'll do that on the 5-minute chart. So we have the macro. Okay, so this daily low wick graded. And then you can obviously see this fair value gap overlaps, this fair value gap overlaps. Those are your high probability fair value gaps. Very, very simple. High probability fair value gap. High probability fair value gap. Let's make this orange. Now it's all about narrative. It really is all about narrative too, but let's make this orange. So we're looking for, this is previous day. This is literally previous day's low. So previous day low. So previous day wick 75%. On the 5-minute chart. Yeah. All right, let's go. Let's move on to the next day. I think we studied this day pretty well. I'm not gonna do PM session. The macro retracements. Why is it a high probability fair value gap? Because it overlaps perfectly. It overlaps with the quadrant, especially that this quadrant, like this one was easy for me to know because we're looking for a price to reach here anyway, right? This is literally previous day's low right here. So previous day's low, and then 0.0 grade, right? It makes sense that it's right there. Now, can we potentially pick a low of day here? I don't know. Let's see if we can pick a low of day here out of curiosity. Ooh, if this delivers higher. Ooh, look at the bodies in that. The bodies lay right on top of that. This fair value gap overlaps. So let's shoot a long shot. Let's shoot a long shot, and let's say we buy inside this fair value gap because this fair value gap overlaps. There is a volume imbalance in that, correct? Yeah. Let's shoot a long shot and see if we can take out the 11 a.m. high. For example, let's put the stop at the low of the fair value gap, and let's take a long shot. Any high probability fair value gaps in there? We're consolidating right at that quadrant level. Okay, we don't. We do pick low of day though. We do pick low of day, but we don't see much of a move. Interesting. So, hold on. Let me make this clear. Well, we'll just finish this up. I gotta put this in the journal. That's kind of golden. So we do manage to call low of day, and we see that final move higher. We were not right about how high, but we were right about this fair value gap specifically holding. So high probability fair value gap, and then why? Because it overlaps with the 25%. They wick 25%. That all overlaps very nicely. Also time, right? PM session. We're on the close of the day, so we're looking for a move higher. So we successfully called low of day. This is probably what ICT used to call low of day the other time there. We weren't right about how high we moved, but we did move to 50%, and then we consolidated at 50%. Close at 50% wick. Interesting. Okay, let's take a screenshot of this, and let's move on. You know what? I guess what we can do is, I guess what we should do is, hold on. Let's make this cleaner as well. Take a screenshot of that. All right, let's clear the chart, and this is what we're gonna do. We're gonna put NQ daily chart here. And then we're going to go NQ. We're not even going to look at dollar. We're just going to make this an easier backtest for ourselves. And we'll put the 5-minute chart up in here. Actually, we don't even need that, bro. Let's just go 2. And I guess some people on TikTok can't see that chart. So we'll do NQ. We'll just start on the 5-minute. And then we'll go NQ daily over here. Make that small. If you're on TikTok and you can't see the full screen, you're going to want to come to YouTube chat. Okay. That was a good study. Let's move on to the next day. So we already saw this get used very nicely. And what we need to do back again is, I actually forget, so let's go back. We shouldn't have removed this marker. So let's go range quadrants. Oops, I'm not trying to play time. I accidentally am. Okay. I believe this is the highest high and lowest low. Let me double check. Oh, it actually isn't. It's changed because if this is day 1, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Wait, what? Hold up. Hold up. Oh, no, I'm tripping. Okay, this is the range. How did you learn quadrants? Actually, I didn't learn. I'm learning them right now, to be honest. If I'm being honest with you. Okay. So, we're still bearish. Let me lock this level in. Okay, I'm going to lock that level in. And we're still looking for a run to this low here. Let's lock that level in. And we have some wicks here. Now we're looking for a setup in here. It's complicated because there's a lot of wicks, but I think we want to focus. So listen, we got to build narrative in this, okay? If we're not expecting a run to previous day's high because we're bearish, we wouldn't want to use a wick here because that's pretty close to previous day's high. We'd probably use something like this. You know what? First, let's look at the intraday chart and see where price can likely go. Okay, let's start with that. Okay, so 15-minute chart. Okay, we left these equal highs. We broke. Huge imbalance in here. Bearish. That's really nice in the grading. Okay, we want to look for a run lower. So which wicks would we use? Daily. Are we backtesting the FEG? We're backtesting wick grading. It makes it a high probability fair value gap because it overlaps with the wick quadrant. So if we're looking at something in here, we're looking at these two wicks. That's the way I see it. That's the way I see it. I could be wrong. Also, I accidentally skipped too far forward, Ran. Okay. The way I see it is we got to look at these wicks. And let's get this precise. The high comes in at... Hold up. This should be 061. Right there. And then the low comes in at 916. And then we'll do another annotation. And these are probably going to overlap. The low comes in at 870. While the high comes in at 54. So let's go 870.5. 870.5. And then the high comes in at right there. Let's make this one orange. Let's make this one red. And let's study the price action on the next day. It's Wednesday, January 4th. Okay. So we're looking for shorts. We see, okay, this is a good starting point from where we were last time, because last time we didn't have any overlapping levels. This time we do. So we have the SIBI here, very obvious SIBI, and let's go to the hourly and see if there's an hourly one. The hourly one's right here. Let's use the hourly for now. Yeah, there's also a new day opening. There's a new week opening gap in there, but let's not. I don't want to use that. Also, I'm not liking this orange. Let's go purple. And let's go blue. Okay. So, where do we have an overlap? It wasn't just wicks. No, you're right. It's not just wicks. But I'm looking at here in the 20-day if the look back, and that's kind of what we're working with. So you got to build narrative into this. This is a market where we want to see a run lower. If we want to see a run lower, it's 930. We want to see buy side get taken. So I think we just wait for that. Okay. Does that count as a run on buy side? is this a high probability inversion fair value gap? It overlaps with the 75% wick, and we hit the daily SIBI, the 1 hour SIBI consequent encroachment level, but we didn't really run buy side. I think let's see if we get a first presentation in there. Okay, I would argue this is a high probability first presentation fair value gap. I don't think that's an argument. Okay, so I'm watching this. I see the overlap. That's a clean overlap. So maybe we could have got short on that inversion, but let's see here. Wow. Okay. Okay. Can we snipe an institutional order flow entry drill right here? That's what we're going to look for. And we'll look for a run to Asia lows. We just short this fair value gap. So we'll short it there. Would stop here. Now it could reach up. But let's try it. I mean, let's try it. Okay. We're looking for that low. I wonder. Nope. Absolutely destroyed. Okay, we're back into first presentation fair value gap. I would argue that's a high probability fair value gap, but the institutional order flow entry drill failed. But we did take out sell side, so maybe that was just like a bad trade, you know. But anyways, okay, let's see. I would argue this inversion would be high probability because it overlaps, and now that we got the retracement, let's see if that works out. We trade the first presentation. We inverse this. Okay, let's wait here. Okay, I really like this short. I'm going to be honest. I like this fair value gap. So we have to note that this high probability inversion failed, but we did take out sell side. So let's put a note. So this failed. This IOFED failed. So IOFED failed. We did take... This guy said purple is going to win. We did take sell side though. So we may want to keep that in mind. Let's make this red. Okay. Whoops. So IOFED fails on a high probability fair value gap candidate. But obviously we took sell side already. And now we came up back to that same fair value gap. We took the high. We see an inversion overlaps with that quadrant level. And I think that's a high probability inversion. So let's get in short there. Let's go and stop at the inversion high. And let's aim for that. I believe it was 25% that we were looking for. That low right there that overlaps with the quadrant level. And really, I think really we can get away with a stop at right there. Consequent encroachment. So let's try. Yo, we are definitely sniping that shit. Okay. Let's study these two for institutional order flow entry drills as well. Okay, let's try shorting in there as well. And let's move the stop here to the BPR. So we added a short. The bodies are respecting that 50% level. I'm just going to play this out and then see what happens, I think. Yo, okay. Good study. That's a good study. This was a high probability fair value gap institutional order flow entry drill. This was a high probability fair value gap institutional order flow entry drill. So how do I study this? And then we trade all the way down to that quadrant low. Can we get to the purple low? Yo, we got to the purple low. All right, this is a good study. This is a good study. Shit can get complicated though, that's for sure. Okay. And this is all inside the macro too. Okay. First things first, let's label the macro. So we have to also talk about the setup that failed. So this was a high probability fair value gap, high probability FEG. This IOFED failed because we took sell side. I'm assuming. Let's go with that narrative. So it overlaps with the quadrant level. And I think, can we just remove the blue one? Did the blue one... Let's just remove blue and see what happens. If we remove blue, then this purple was not good, but this purple was. And if we remove blue, then this also would have not have been a high probability fair value gap, so we would have never even shorted that to begin with. This one would be. This one would be. This inversion would be. No, this inversion wouldn't be. It would just be this one, actually. Let's put blue black, but let's put blue back. No, put the blue one back. Man, fuck them. I don't know what I was using for blue. Let's just put that up there. This could be a candidate for a high probability for value gap. Okay, let's play this out. Let's snipe it. If we get in there. We probably got in there on like the 2-minute chart or something. Yeah, we did. Okay, let's try a short there as well. With a stop at the high. And let's target, I don't know. Let's just target the blue wick low. Yeah, we're trading in between quadrants right now. Interesting, okay. I think it gets difficult when you don't know, like, when there's a lot in there. It would have blew the account. I mean, we're still up on the account. Can you guys not see the P&L? We're still up on this account. This gets difficult. This gets difficult. Okay, first things first. Because, yo, this becomes really difficult because how can we say that this was not a high probability one just because it didn't overlap with purple? It overlapped with blue, but we took sell side, so I guess you wouldn't use it anyways. Just figuring out how I want to do this. Like, I'm just thinking, like, how useful is this? There's a lot of fucking wicks. Like, there's a lot of fucking wicks in here, bro. 1, 2, 3, 4, 5. Like, that's a lot of wicks. I'm gonna assume previous day's low wick is pretty important. And then we were using this purple one because that's the most recent one we just inversed. Like we just used that. I don't think it's even wick you're supposed to grade. It is wicks. Well, it's not. It's wicks is one of the things. I don't even remember which one was purple, guys. I'm gonna be honest. I don't even remember which one was the purple one. Okay, I think what's important, I'll tell you what's important. The one that's important is the one that overlaps with the SIBI. So if we're expecting this hourly bearish fair value gap to hold, the wicks that overlap with that, this is a theory we're rocking with right now. When we find a fair value gap that we want to be respected, we want to find a wick on the daily chart that overlaps with that fair value gap. That's why I chose, well, there's this one. Okay, so let's use this as red. And then there's also this one. We'll use that as blue. And it would actually be like this. Okay. And then there's also this one. And this one. There's 3, man. Like, there's 3 that overlap with the fair value gap. Alright, let's go back to the chart and see now. Okay. We have red. Red very nicely overlaps. We have purple and blue, which also overlaps. Fuck this, bro. It's so hard when there's so many wicks. When we're just pumping all-time highs, it's easier because there's only like a couple you would look at. Here we have like 5. Okay. I like this purple one because it overlaps here. Where's first presentation? This first presentation. Nothing overlaps with first presentation. And I like this blue one. I'm not really liking this red one. Alright. So. This wouldn't even be a high probability for... Oh, it overlaps purple. This guy said just use the longest one. The longest wick. Well, that's 183. 166. So you're saying just use the longest one? I mean, we could try that theory. We could try that theory. Just the longest one? The longest one that is lower than the rest? What does that mean? That's what ICT said, the longest obvious one. But there's no way you guys are looking at this and telling me there's an obvious one. Which one of these is the obvious one to you guys? None of them. None of these are obvious for me. If I was trading this live market, I would use probably... Like, you have to think about this. You have to think about this, okay? Hold up. This is what we just saw. So the market went up, traded into the bearish fair value gap, and then broke down. Okay? Did we inverse this wick? Like, no, I think this one is relevant. This one is definitely relevant. This is yesterday's wick. So we're going to keep this annotated on the chart, okay? We're going to keep this one annotated, and we'll just do like dotted lines, and we'll just make it like faint, like a faint ass red, okay? That has to be relevant. That was yesterday's wick. And if we're going to get below previous day's low, we're going to have to use this. So we'll keep that one annotated. Besides that, I like this one. Or this one. Because this one was inversed and respected. Or we say fuck wicks and we just go straight. We just start like grinding out opening range gaps, new day opening gaps. I like the inefficient. I like the fair value gap grading a lot more than what's it called? I like grading the fair value gaps a lot more than the wicks. There's too many damn wicks. Too many damn wicks. Hold up. Okay. So this is good. Let's start making some annotations. Okay. H1 premium city. Let's get it in there, and let's mark out the 50% level. You know what? While we're at it, let's grade the wick. Let's grade the fair value gap too. So we were right about this fair value gap holding price. Let's grade that, and let's not extend it, and let's put it right there. Okay. What? Okay. We all understand this much, that this fair value gap is likely to be supported by price. Okay. We can all agree on that much. We call that out pre-market. This fair value gap overlaps with purple. Not really though. Is there one that overlaps more? Like a 50% overlap? Like maybe this? Yeah, to an extent. I feel like just using this is a lot better, no? Like this fair value gap right here, this specific fair value gap overlaps with the wick quadrant right there. Perfect. What more do you want than that? Just see if the candle is in favor with buy seller and dealing wicks. Go short here. Go short here. What are we signaling now? Guard grading the last swing. We could also grade the opening range. Yeah, that's also a possibility. That would be this. Actually, that would be this. He was right, purple one. I feel like I want to use just opening range gaps. Can you switch to regular trading hours? Let's do this. Let's try something real quick. Closing price, opening price. Like, obviously this is a high probability fair value gap. There's a CISD overlapping, and there's the fair value gap right there. And it's inside the macro, and from the hourly bearish fair value gap, and 25% opening range gap. That's a high probability fucking fair value gap. That's unquestionable. Where's previous day's org? Do we trade? Yo. Yo, wait. Yo, look at the bodies in that. That's nice. That's really nice. So hold up here. Now we're talking. I might just become an org master. Org is not like, you can't, what's it called? You can't debate org. Org is like, there's only one. You know? It's not like which org. I think we can all agree this is a very high probability for value gap. And I don't know if tomorrow's gonna be green or red, but I'm bullish on the day. I'm bullish on Nasdaq. Yeah, this is complicated. I'm not gonna lie. Yeah, don't even get me started about the order blocks inside the quadrants, bro. Don't even get me started. Like, okay, the way I see this is this next candle goes up, we short this order block. That's the way I'm seeing this right now. See, that overlaps. But you can't just short every single overlap. But previous day's low is still open. Do we try just sniping a short in here? Wait for an inversion? Like, I don't even know what I'm testing at this point. This shit just got complicated. It's 1050 macro. We retraced. We're inside a high probability fair value gap. Let's play this out. Full reversal. Interesting. Yeah, I'm gonna be honest. I don't think I can. I don't think I'm gonna use wicks. I think we're gonna just rely on inefficiency grading and find fair value gaps that overlap with the quadrants of the inefficiency. Because if I ever see this shit on the daily chart, there is no one who can tell me which fucking wick to grade and use it before taking a loss. Like, how are you gonna put trust into that? Something like this. There's no way. There's simply no way. I don't give a fuck if all 20 wicks overlap. Just use the hourly Sibi. You know? Just use the hourly Sibi. It's so much easier. Unless there's a really obvious wick, like for example, this fair value gap, really obvious one, okay, this wick overlaps, and this wick overlap. Even then, there's like 4 though. I think we rely on org. Okay, what am I gonna use for sure? The 20-day look back, we're gonna use that for sure. We're gonna use org. I already use org. New day opening gaps, new week opening gaps. And we just start grading the higher time frame inefficiencies, I think. Listen, wait on sweep. Just on the Discord, what's up, brother? You think tomorrow's a green day or red? Who's under the table? What? Grade daily wicks and pre-mark, and if they ever use support resistance, make time use them. Yeah, that's a possibility too. Just find which ones were being used before in that same day. Yes. Like this was probably being used pre-market. But then it's so subjective. Like any time frame at any single one being used, I could argue this is being used. Right? I could argue it's being used here and here. If I go to the 1 minute, it doesn't really look that clean. The 5 minutes pretty clean, I guess. I feel like fair value gaps are the way to go. Fuck the wicks. I will use the wicks tomorrow when funded. If lows or highs are not taken, why are you looking for trades? We took out lows and highs. I think let's keep this annotated and let's go from there. I think that's what we're gonna do. We're gonna focus on inefficiencies in the fair value gaps. Let's focus on that and see how we do. I think that's a good way to do it. It's very, very simple that way. Okay, so what time is this? Okay, we're going into PM session. We're still inside that hourly Sibi. And we're looking for a high probability short. Okay, wait. This fair value gap, does that overlap? We gotta be patient. Like we can't rush this process. We're trying to demand a very large amount of precision. Let's make this faint. Yeah, I could do this all day, bro. Alright, let's make this faint. And let's put the wicks back in. Okay. So we're looking for this hourly Sibi to be held. Or inversed, for that matter. But I'm bearish. So if that's the case, we want to find an overlapping, like this 5 minute bearish fair value gap overlaps with the 50% level. Let's see if we break lower. Like I'm in that, John. That 5 minute fair value gap overlaps the consequent encroachment level. I mean, then again, this bullish fair value gap also overlaps. So I guess if we're wrong, we'll find out really quickly. I don't know. Let's just see. Bro, all this and this today was fucking FOMC? Are you serious? Everything I just did and today's FOMC, bro. Oh, I'm so fucking shit, bro. Oh, since when did they put FOMC on the first week? They never do that shit. Bro, literally all that, and today's a no trade day morning session, bro. That's fucking hilarious, man. Where's your stop? Bro, there. This is... Bro, that's fucking hilarious, man. Alright. Anyways, okay. You know what? FOMC is key, though. So let's fast forward to 130 here and see if we can find something. I mean, listen, I say that because it's so manually intervened before. Alright, my motivation just came back. My motivation just came back. Let's lock in here. I'm gonna mark out these two wicks because they're both there. We'll make one red. We'll make one blue. And we're looking for shorts now that it's the right time. Okay? You see the bodies they're respecting? That's very nice. We have to wait till 1:30, so let's fast forward a bit. Alright, it's 1:30. Let's look for an institutional order flow entry drill. Look. Why would this happen? What's going on? Anyways. Okay. This overlaps. That's an institutional order flow entry drill. Can we get a high? Okay. Let's try this. I'm going to go ahead and assume that this fair value gap does not overlap. Does not inverse. Because... Also, what the fuck is on with this wick? Okay. Okay. Because it overlaps right on top of whatever that zero line is. I would add on this inversion or order block. We did get the order block, but not the inversion. I guess we were wrong. What are we using here? Let's keep them both marked up for now. Extend this hourly Sibi. Back inside the hourly Sibi. I guess you want to be finding your shorts in here, though. I mean, if you were bullish, this fair value gap overlaps pretty nicely. So does this one. So does this one. Actually, not really. Well, yeah. The second candle does. We just fall short of the high there. Maybe let's look for a long. I don't know. Nothing high. Okay, this. Alright. Let's try this short. Institutional order flow entry drill. Off of this. It's macro on close. We got unfinished business down there. Is this a high probability fair value gap? It overlaps with the quadrant level that was used here and here very nicely. So I'm going to go ahead and assume that this quadrant is key. Let's see. I'm going to add a contract. I'm going to move the stop. Yeah. I like what I'm seeing right now. I like it. This is a... Okay. We're going to add it here because that's another one that overlaps. Can we deliver like give me some confidence that we're going to deliver to 75% right now. Boom. No. Did we take the low? It was so good until it wasn't, you know? But I like it. Institutional order entry drill. And, you know, we did take out the bulk of the liquidity. It would have been nice if we got to 75. It would have been nice. It worked. Dude. Let's see what happens here. Interesting. Do I even want to study this? Do I want to put this down? And we saw a nice price run. Like, this is not a joke. Like, this price run is... Okay, it's only 75 points. Never mind. I don't know. It's just worth the study. We see the hourly SIBI and annotates with the wick. We use the wick here. Breaks. As soon as we break below the wick, we use it right there. I think it's a good study. I think let's put it in our study. Let's put it in our study journal. Because here we use the wick. Do we break above? No. As soon as we break above, fair value gap, that's a high probability fair value gap. High probability fair value gap. This is not a high probability fair value gap. This is kind of like cherry picking, though, I feel like. But that was a nice institutional order flow entry drill. Not much to put in the journal here. Bearish higher time frame. H1 SIBI premium overlaps with what red wick is this? This would be Friday, December 30th. December 30th. So that's the one we use. We use that. Probability. Can you explain how you're choosing which wicks? Right now, the only criteria I have, and I'm not saying you should do this, what I'm using is I'm looking for PD arrays that I expect to be respected and look for wicks that overlap. So for example, this hourly bearish fair value gap, see how the wick quadrant overlaps? That's the one I was using. You know, just because it overlaps, and I think that makes sense. Is that the best way to do it? I don't know. Maybe. Like even this. Look at that, man. Look at this being used. Lays right over top that 25% level. We break above. We use it. Respect 50% perfectly. Yo, this one's a really good study. Because this one was used higher. Delivered to the hourly SIBI. Just falls short one tick of the wick high. Consolidate, and then we break below. That's a high probability SIBI with a high probability inversion. That's your institutional order flow entry drill. This is your bearish order block. And then we get here, close below, and then once we close above, you probably just terminate there. Mark that breaker from 14. This. Yeah, there's a breaker in there as well that overlaps. Not really studying breakers right now, but... Okay. I like that. The thing is, with so many wicks and so many time frames, there's always going to be one that overlaps. Because you got 1, 2, 3, 4, 5 minute, 10 minute. There's going to be one that overlaps. You really have to get real precise with this. But we are starting to see some structure. You're right. Whoever commented that, you are right. We are starting to see some structure. Let's test out the theory. Let's skip to NFP. Let's go to NFP. And let's do the exact same thing. Okay. We're still bearish higher time. Actually, we took that low out. So we could see a move higher. Right? Okay. We took out that low. I'm going to mark out... Which fucking wick, man? I don't even know. The most recent one? Maybe. I guess that makes sense. There's a lot in there. I have no idea. Out of all these wicks, which one to mark out? Okay, no. Let's go back to our structure. We have structure already built. We're going to mark out the one that overlaps with the imbalance we're studying. Okay? That's what we're going to do. That's what we're going to do. So if we're looking for a run to these equal highs, okay? If we're looking for a run towards these equal highs, we're going to be looking at this SIBI. this buy side imbalance right here. Okay, so let's mark that out. This is where I'm getting my structure right now. I don't know if this is good. See, does anything overlap with this? Okay, we're not even going to use that. We can't even use that. Okay, what we can use is this. So this is our bearish fair value gap. We're definitely going to have to trade against this. We don't have a choice. Which higher time frame wick overlaps with that? Oh, great. Fucking all of them, bro. Literally all of them. Which one overlaps the most? It's the same one. So this one does. Yeah, we're going to use the same one we've been using. All right. Purple. We're using purple. Okay. So it overlaps there nicely. We have an overlap. We're looking for longs. Okay. This can be considered a high probability fair value gap because it overlaps with the wick that's in relation to this. I feel like I'm just fucking. I don't even know this is as precise as I think it is. Okay, we take sell side. Look at the bodies there in the wick. We inverse. Mm-hmm. Well, there's so many. This is not purple. You said purple's the longest one. This is purple, bro. Oh, this one? Okay, this guy says to use this one. You may be right. I don't know, man. I don't know. Why do people making trading so complicated? Can I just say something? Trading is complicated, okay? You're trying to compete against literally the smartest people in the entire world who make these markets with insider information and trade with billions of dollars. And then what? You want to trade a fucking bull flag? If you think that's enough, by all means, man, you do you. You do you. I think I like this inversion. Let's try it. I'm not saying you got to make it complicated. Obviously, your goal is to simplify. Um, where's the equal highs? Obviously, fuck me. I just skipped sessions, bro. Yo, that trade would have hit TP. Yo, wait. We did it. Nah, I'm going back. I swear to God, I'm going back. I bought this inversion, right? Yeah. All right. This is the trade we took. We buy this inversion fair value gap because it overlaps with purple, right? Stop loss at the low here covers this bullish fair value gap. And we're looking for those equal highs, which also overlaps with purple. That's no, that's not an institutional order flow entry drill. I'm trying to study where we could add contracts. We could buy that OB maybe? I don't know. We could buy this inversion. Can we move the stop to the low here maybe? Can we buy that inversion as well? Because it overlaps. Let's see if that inversion gets respected. Okay, there we get to the 50% level. That should be a breakaway. That OB overlaps. Okay, let's look at the 75% level now. Now, before we trade with the 70%, we want to see a run on lows. Can we take out lows? Wait for lows to get taken. This fair value gap overlaps. Let's buy that fair value gap. I'd be very content. It's like this. Let's buy that fair value gap. Let's see if that fair value gap holds. We trade all the way down to the 75%. Back to 75%. Trade to the low of it. We do close below 75%. The bodies respect that fair value gap really nicely. We do break below it there. A lot of consolidation. Yeah, I'm going to be honest. I don't see myself using wicks. I'm going to be honest. I think that was a nice move. But, like, realistically, bro, I'm in this move on this CISD, bro. 954. I'm in that shit. I'm in. Or off this inversion. Off the 50%. Like, let's make it way fucking easier. Very obvious fair value gap right here. This is the NFP fair value gap. This is NFP protocol that I follow every single time. Okay? This fair value gap is laid right over top 50% by that inversion. It's literally as easy as that. You know? Like, is that just me? Here's a very obvious wick. Very obvious wick. This fair value gap overlaps the quadrant level. Buy it when it inverses. It's that simple. Right? Otherwise, bro, I can agree. If we're trending, it's easy. Like if we're like here, okay, obviously you're gonna use this wick the next day, right? Like on this day, you're gonna use this wick. It's so obvious. There's no other wick. If this is what the market looks like, well, fuck wicks, bro. We're not doing that shit. Like there's no way. The reason this is difficult is because we're not trending right now. And the reason it's so easy when ICT explains it is because we're trending. It's so obvious which wicks you're gonna use. Like, look, we have a fair value gap here. For example, you're obviously going to use these wicks. Of course you're going to use these wicks. There's no other wicks. Those are the only two options. 1, 2. You can use this one as well, but it's already inside the fair value gap. So you're going to use these two, right? If you're trending and you're here, when this day comes, you're going to use this one. It's the most obvious one. Look at the sensitivity there on 50%. You can already see. And then when we go higher, then you're going to use this one. When you're trending, it's very easy. But when you're like this, it's way too difficult to do it like this. How do you use org quadrants to find high probability fair value gaps? When you have an org quadrant that overlaps with a high probability fair value gap, use that one. And I think that's what we should do. Alright. Who's in here and who wants sauce? I'm gonna give you guys some sauce. Yeah, this is fucking barcode shit. Alright, we're gonna start org testing. We're gonna start org testing. And I'm gonna give you guys sauce because you guys stayed. No, not ICT. This is Gatie sauce, bro. This is going in Gatie's book. This shit is inside my USB. Only 100 people now because it's a Sunday. If people are not locked in like me, bro. By the way, guys, I was literally up for 5 hours last night doing exactly this. I was doing exactly this. You know what? I'll just show you guys the sauce. We'll go sauce live, bro. Sauce live. Live sauce right now. Okay, regular trading hours. I don't need anything else, bro. I don't need no daily chart. Actually, I do need a daily chart. All right, we're in the full screen now. So if you guys can't see, make your phone go sideways. Testing the full screen. You gotta be able to see. I'm gonna give you guys statistics on opening range gaps. I'm just gonna be an opening range gap master because I already have statistics on them, and I love opening range gaps. Okay, we took out the sell side. We're expecting a potentially move higher. We took out this high. It's Monday trades high. I'm still bearish. We're trying to avoid picking a top. So what I'm gonna do is mark out the bearish order block right here. And I think there's a weekly fair value gap in there. Yep, there's a small weekly in there potentially. Oh, it's right here. Okay, that's what we're going to do. So I'm not even gonna grade it. I don't give a fuck. We're gonna do this on a light red. In fact, let's extend that out in time. You guys can very obviously see. Fuck it, man. I'm gonna grade it slightly. I'm just gonna ever so faintly grade it. It's a weekly fair value gap, and we're gonna be using it. So we're gonna make this really, really simple. All right. And we're going to look for a run lower, obviously. Let's mark out this low for now, and we'll leave all that shit annotated. 15-minute chart. We're pretty one-sided. We have a new day opening gap right here. And we're in deep premium. Inside that weekly SIBI, inside that daily order block, taking out the daily highs. Let's see what happens. Due to swing higher. Oh, I never marked out org. Sorry, that was my mistake. Okay, there's opening range gap. Yeah, we're definitely going to look for shorts. So, closing price, opening range gap. I'll show you guys how to use opening range gaps. Is there another one over here that I want to use? Nah, nothing overlaps. Okay, easy. We just have to focus on this one. Okay. Not yet. Monday, okay, we take the high there. 50% of the weekly SIBI traded right there. Was it just a fuck shorts kind of day? I mean, we can short into this gap tomorrow. It doesn't have to be today. We are so fucking bullish. I mean, yeah, bullish. Okay, we got the breaker. And you see this overlaps. I like this short. We'll just short 1 mini for simplicity's sake. We're gonna go stop at the high of the fair value gap. And we're gonna fucking send this all the way down to the equal lows. Okay, let's watch this. We can validate the breaker and the fair value gap. And all shorts. Oh, this is a no news Monday, bro. Actually, I don't know if it's no news, but it's almost always no news. Bro, no news Monday is a myth. I'm telling you guys. No news Monday is a myth. Like, that shit expands, bro. No news Monday is fucking print. It's like there's no manipulation. Like, damn. I mean, I'm gonna be honest. I wouldn't have traded anything in here. Did we get a PM reversal by any chance? Ooh. Yeah, no news Mondays are good. I'm liking this PM reversal. That was my protraction model. I missed it. All right, let's try this short. Stop at the high, the weekly CB 25% level. This would be not an institutional referral entry drill. I'm gonna play this out. Wrong again. That PM reversal is nice. It makes sense to look for a reversal in PM. I want to get short into that opening range gap. I want to get in short. No, we're gonna get there without me. I'm getting FOMO. I want to get in short to the opening range gap. Someone said long here. We got there. It took the entire day, but we finally got there. All right, we'll probably look for this to close the next day. So let's go to the next day. Okay. Ignore what's happened over here. We filled it up completely, but only electronically. So we're going to look for shorts this day. And on top of that, we're going to mark out today's opening range gap too. This is where things get interesting. We closed here, opened here. Inefficiency grade. Now we can find maybe a really high probability trade. Okay. We trade to yesterday's opening range gap. Yo, man. I'm gonna be honest, bro. Protraction model is the move. Alright, let's wait for us to break back below. There we do break back. We do break back below. I don't know where we traded into. Probably some buy side pool. Nice. 15-minute Sibi. I like that. Okay. We broke below yesterday's opening range gap high. And we're trading into today's opening range gap right there. And we're trying to see an RTH delivery to these equal lows. To me, this was like a really good trade. Alright, we're completely incorrect. We did get to 50%. Ooh, that's nice. Alright, maybe we get an institutional order flow entry drill. There. Stop here. Target here. No News Monday's a myth? I think it's a myth, bro. Wait. I hate when you delete a drawing and it doesn't work, bro. Yeah, this ain't it. This may not be it for me. I feel like we just stick with what we've been using, which is the what's it called? Opening range gaps. This guy said I'd rather my one-on-one setup. That's what I'm saying, bro. I'd rather just take this reversal model short. This protraction model. Target the sell side. But to be honest, in backtest, it's hard to do this like properly because you just want to wait. You just want to what's it called? Like you can't really do it slowly. You know, you just kind of rush through. All I know is if ICT was in this live stream, he would tell me to grade this shit. Oh, that's clean. Wait. Did we fumble? That's clean. 50% used to take the buy side, break below. 50% used to retrace institutional order flow entry drill. 75% we break above, and then we consolidate. I like this. Let's extend this into tomorrow. Wait, what time is it? No, let's use it today, actually. It's not over. It's all about time. We take highs. Just wait for 2 p.m. 1, 2, 3, 4, 5. Okay, potential 2 p.m. power of 3. We're still inside that 30-minute. That could be used. Do we break lower? I need to see a breaker in there. Alright, we're going to use Monday's opening range gap on Wednesday, which is today, which also has an opening range gap right here. We're trading on the daily near some daily highs. We also have that wick on the daily. Actually, that's an obvious fucking wick. I would mark out this wick even before ICT told us to. It's a very obvious wick. We're trading right in it. Okay. So this is opening range gap. Let's just make that gray. And then we have the wick quadrants. All right, let's lock in. This is a good day. Everything's aligning. Okay, 9:30 opens. We take out the highs. We do get a CISD there, but no fair value gaps. I'm waiting. Okay, we do trade to the high of that wick. We take out the daily high there. We got a strong CISD. That's my model. Whoa, I don't know why I traded 5 minis. I thought this was micros for a sec. Anyways, who cares? Yeah. I like ye. Okay. We're looking for this. And if we get this, we're using that as a high probability. Not yet. Boom. That's exactly what we want. Short, trail to stop. We're using that wick on the daily. And then opening range gap as well. That's an institutional order flow entry drill because it overlaps. We add. This may be very nice. Yeah. Yeah. Very nice. Very nice. 25% opening range gap right there. That's nice. That's very nice. We get back above, we use it there. That's a high probability fair value gap, and this is a high probability inversion. All right, let's use this. Let's annotate this. Okay. 323 and 282. 323 and 282. So this is current day opening range gap, and then these red lines, that's previous day's premium wick. So very obvious levels. Like there's no really ambiguity in this. Let me fast forward a bunch. And I'm adding this one to the journal. So I want to see what happens for the rest of the day. We take the buy side. All right, but that's doing other stuff. No problem. Okay, so I will say one thing. This shit is way too far. So this goes to 282. Because that's opening range gap. Like, you don't use opening range gap here. It's not there yet. You got to start using it right there. Right there. Perfect. Okay, that's nice. There's a 2.5 marker. And I like this. So this would be previous day high, the daily wick 1.00. This would be a high probability fair value gap. High probability fair value gap. This is your opening range gap. Org current day 25%. What time do we hit 25%? 10:50 macro. What time do we roll over here? 10:30. That's stuff I like to see. Gatie, how much R do you make per week on average? One single account? I don't know. Not every week's a winning week for me. Sometimes like 6, sometimes like -2. Anywhere from like -2 to like +10. I mean, last week I made I think I made 6 last week. But it's also hard to keep track because like when I get a payout, then we're on a new account, and then things get difficult, you know. Things get difficult when you're trying to. All right, this is a good study. First presentation, 1050 macro. We set the low at 75%. Ooh, that's such a key too. I didn't even see that. Low at 75%. And then we get a retest 25. We take out sell side here. And this would be a high probability inversion. Actually, it's not. Yeah, this is a high probability fair value. And this is the one that delivers, you know? And you also have an institutional order flow entry drill right there. I'm not going to mark that out. Interesting. I guess now what we'll do is let's just do some actual back test. I'll just do a couple of actual back tests the way I trade. Um, I'll do like 1 or 2 days. I saw you were in the same space as ICT yesterday. Yeah, I was. I don't need the 0.25 or 0. ICT last game was good. It was good. This happened, bro. Hey, Papa, isn't market closed? Nah, not for me. For me, it's open, bro. Always open for me if I want it to be, you know? When you get to a certain level, the market doesn't close. Someone's got to move the market, you know? And if that has to be me, if I got to take that responsibility, well, then I got to take that responsibility, you know? All right, we'll download that. All right, let's just do some couple of back tests here, and then we'll call it a day. Um, just some actual trading. So, daily chart on the Nasdaq. I'm not even going to use ES. We shifted and we're trading higher. We're inside that 20-day look back we talked about. 50% is right there. And for me to double check, mark out 20. Yep, still right there. So this is really key for me. I would mark out this fair value gap without question. That's what we're looking for potentially, sensitivity from. So I'll mark that fair value gap out. We're trying to avoid picking a bottom. Let's make sure we're precise with the annotation here. And we're going to go with 1 point. We don't really need the price levels on that. Okay. So 15-minute chart. Let's bring this in. Wait, what is this? Yeah, we don't need it that far. All right, that's that gap on the 15-minute. This is a Thursday, January 12th. We have a range set here, low to high. 1 minute chart. If we're looking for shorts, we want to see buy side get taken. Let's look at 8:30 opening price. Very key time. That would be right here. It looks like a CPI day. That's 8:30 open. And let me just make this a little bit more faint. And perfect. Okay. So just a regular back test. Let's see what market does on open. Okay, we get a first presentation for value gap. Very nice, clean, obvious one. So we'll annotate that. Let's make it a purple marker. So first presentation. We trade into that. We go down below the opening price. Could argue I missed the setup in there, but we left the equal lows there. We may be able to find the setup short here. It is 10 a.m. We have a range right here. I really like when this happens. We may get a just textbook A plus protraction model. Let's anchor our fib. That's the fib. All right, and then let's see if we get a protraction model in there. Back above the open. We get a break lower. I'm going to try this short. So bearish fair value gap in there. Close below. Opening price. Viewing this as a bearish order block. I don't want to see this high get taken. And we're looking for a run to these equal lows. TradeZilla is a lot better than Forex Replay. We do get stopped there. It's a really aggressive move. Back to first presentation. Bodies respect. Let's see if we get a break below. Not really. Is there a 15-minute gap? No, we kind of just shifted bullish. I suppose we may not go lower. I am still bearish higher time frame though. I am still bearish higher time frame. Did we inverse this fair value gap? We did. Kind of tough to say. We got unfinished business up there. Now, I'm gonna be honest, I don't know where this is going. 15-minute bullish fair value gap. Where's first presentation? Is it? That's this one. I'm leaning towards longs now. Nah, this is just backtesting. Yeah, I'm gonna be honest. I have no idea what this. I gotta look at ES. I'm probably missing information. Yeah, there's an SMT there. It's not equal highs. It's SMT. Yeah, that changes things. That changes things. So 5-minute bearish fair value gap, 1050 macro, and I'm gonna look for a run towards these equal lows. We trade into the 15-minute fair value gap in there. See if I can add a contract in here if we break one more time. I mean, it's 11:30 now. Now we have equal highs. This looks like it's probably dead. It's not open. He's on replay mode. Yeah, guys, market is not open, guys. We're just testing. Anyway, so we don't take out that low. I still expect this to hold. What even is this fair value gap? I honestly forget. Was it the daily? Ah, yes. All right, let's go to the next day and see what happens. Okay, we're starting to see that move lower. That we wanted. It is Friday. We left equal highs here. We left equal lows there. Very neutral. Very bearish going into the day, though. I'm going to mark out this low. See if we can find a high probability short. We trade back into the daily fair value gap. Take out the high. It's really sloppy. Let's wait for our first presentation. Really, really sloppy. I like this fair value gap right here because it's above the highs. Okay, we have 10 a.m. news. I'm going to zoom out. 15-minute SIBI in there. I like this short. High risk, high reward. So 15-minute bearish fair value gap. Right in there. We wick. Inversion fair value gap. Plus bearish fair value gap. That's the inversion. That's the bearish. And it's in one-sided in the morning. We are so very wrong. 25% of that daily SIBI. This is shit PA, I'm gonna be honest. How can I incorporate it? Guy, can you explain opening range gap? I have a video on YouTube. You should just watch that. Easier if you just search it up and take a higher low. On EQ high, on EQ lower. Equal highs does count as SMT. Yes, it's still higher or lower, right? I think the kind of thing I say we're very inconsistent. I think it's gonna be too difficult to find, man. To be honest, I think it's too difficult. I think I'm just gonna use the opening range gaps. That's where my edge kind of lied, anyways. That's where my edge lied, anyways. And then if you have those obvious wicks, like I would use the wicks, but it's gonna have to be like blatantly obvious, you know? Let me get on call? Hell no, bro. I don't even know you. Can you share some high probability coding predicted outcomes? Opening range gap 25%. I don't want your advice, bro. No offense. A high probability 0.25 org is very high probability. Damn, there's no opening range gap on this day. It's just gonna be probably sloppy as fuck. Are you trading on a Sunday? Uh, when you make a certain amount of money, they open the market for you. It's pretty sick. Guys, no one's coming on call. No offense. I don't want to talk to any of you guys. I'm a solo kind of guy. Ugh. Why is everyone asking to get on call? All this shit's frozen, bro. What? What is this? What? Yeah, I don't know what we marked out here, but that shit delivered nicely. Damn, we bullish as fuck, bro. And I'm out here looking for shorts from this. Yeah, I'm gonna be honest. This is gonna be like really inconsistent. I feel like it's just the thing ICT taught. I don't know. In my opinion, has a lot of power, but I don't know how he. I don't know if he expects us to, but I don't think. I don't think you can just hop on a chart, start marking out wicks, and be like, "Yo, it overlaps." There are so many overlaps. It's crazy. There's so many overlaps. So literally, the only thing you can really do if you want to make it high probability is trade the way you would normally. Trade the way you would normally, and then just be like, well, there's also an overlap here. You know? That's literally the only way you could do it. It's the only way. Is TradeZella worth it, bro? TradeZella, I'm gonna be honest, is so fucking worth it, bro. Just spend one moment to not buy a Prophet account and use and buy TradeZella, and that shit is goated. On my hometown, ladies. New opening gaps, new week opening gaps are goated. I see 2024 playlist. Yeah, I agree with you on that. I ran my own statistics. I ran my own statistics with that, and they were very nice. And I think that's what I'm going to use. I'm just going to overlap new days and opening range. And that's what I was doing before, and it was very nice. I think that's the best way to do it. Because those are not ambiguous. Those are not ambiguous. Why go and figure out which wick to mark when you can just mark out new day opening gap? You know? Which new day opening gap? So whichever one is right there. You know? Like it's not an ambiguous like kind of question. You know? Not ambiguous. Damn, this daily chart is so fucking bullish, bro. We're on a Wednesday. Midweek retracement. New day opening. Yeah. I've backtested my Evo protraction model. You made an evolution protraction model, bro? Are you him? Are you him, bro? I mean, that was a nice short from the daily CB high to the equal lows, right? Did we just do like practice some turtle soup, bro? just for fun because I'm bored. Okay, see this? This makes sense. This is the fucking wick you're gonna use. And then you can say this one too. Like, it's obvious. It's right there. I'll pair that with whatever. VO3 concepts. Good night, brother. Wait for a run on sell side. Sell side. Like, I like that. See? Daily wick. Daily wick, 75%. Inversion for back up. Overlays right on top. We took sell side. 1107. Lunge retracement macro. Straight to 50%. Did we one tick 1%? Yeah, I'm gonna be honest. It's basically a protraction model, but one of the periods must form on a wick quadrant. I rate it. If you can find with that good stuff, if you let me know how that works. Like, basically, the inversion for VIGAP has to lay on a wick quadrant on the daily chart. That's what you're saying? I did it earlier this week. Alright, let's see. Oh, I'm gonna fucking trade now. Who cares, bro? Get rid of this shit. Yeah, I'd be down. Protraction model that only overlaps with a wick quadrant. Let's just wait for a protraction model. Well, that's. I mean, you could argue. You could argue that's a prediction. You think that's the high, and then this is your civvy, and then that's your OB. All right, let's go see if this protraction model overlaps with a daily wick quadrant. The thing is, like, how useful is that? Oh, I already know that shit overlaps, bro. Fucking shit staring right at me. Right fucking there at 50%. Oh my. That's clean. That's clean, brother. That's very clean, my brother. I knew immediately that shit overlapped, bro. I could see it from a mile away. And then this one long also overlaps. 25%? Does it get touched? Does this count as an overlap? Yeah, it does. That for Vega counts as an overlap. Either protraction long? Target, I don't know, wick high? I don't know. Me personally, I think I do not want to use the wicks. If I'm being honest. If I'm being honest. ICT also said you want to find setups in the lower portion of the wick, not in the upper portion of the wick. So that's a whole other thing to talk about. You want to find them here. We weren't even studying that when we were using that stuff. N-Dog and new week opening gap is so strong. Let me just say that. It's so strong. It's something everyone should use. Like here. Okay, this can be a perfect. Okay, let's get one A+ example. Give me a setup in the lower quadrant, please. Please, bro. No. No, don't just go. It's so sad. Any good for ICT wick quadrants? Yeah, his most recent live stream. That's the best one. You would argue this is the OB, yeah. But that's sloppy. But it is right at 50%. Let's just keep testing like first 30 minutes, market open. Use a wick. On my hometown, baby. What you should add, I think, Seb is opening range gap quadrant. That shit is clean, bro. Because the thing is, bro, you could literally find, if you mark out enough wicks, okay, what's stopping you from using an hourly wick? You know? Maybe this setup is valid. What's stopping you from using, like, there are so many fucking wicks that if you just pick one, it's gonna overlap. You know? It's gonna overlap perfectly. You just gotta find one, bro. And you can make an argument for literally every single one. You can literally make an argument for every single wick. Why not use this one? It's ambiguous as shit. I'm gonna be honest. I know you can do the 20-day look back, but what are you supposed to do in times like this? In times like this? In times like that? Last week. Like, there's just so many. And that's assuming only daily wicks. Okay, what about 4-hour wicks? Or 1-hour wicks? Or 15-minute? Can you use those too? Because if so, there's always going to be one that overlaps. Now, there are some wicks that are really, really obvious. Like, for example, a wick inside of a fair value gap. Like this. And you got this. Like, this one obviously stands out. You know? That's probably the one you want to use. If you're bearish. If you're bullish, then use it as support. 1 minute wicks. Of course, I use 1 minute wicks a lot, actually. That one I already use. I think we're bullish this week. Because you guys want to talk about weekly outlooks, prep the charts. Let's do a chart prep for this week. So, very simply put, this is your new week opening gap high. Why is it sinking the symbol? Oh, don't sink the symbol. Okay, let's do a charting for next week. So, first things first, this was your previous new week opening gap. But why are the levels not showing? Yeah, man. Okay, let's go with this color. Okay, that's your new week opening gap high and low. Okay. And we traded into that, and then we swept out the low inside. That was a sell stop raid. So to me, immediate draw is previous week high, which is right here. Previous week's high. We'll keep that annotated for sure. And then obviously we have all-time high. Now, obviously, Trump could say something and everything just changes. But going into the week with the information we have right now, I'm looking at this. I would probably look at this wick the most significantly. Don't really need the prices on that. So I would look at those. Make that black to make it simple. And I would probably keep that annotated on my chart. I'll make it really faint. Go with like 50%. So it's really light. Same with previous week's high. All-time highs there. Solid black line, strong draw. New week opening gap in there. Did we ever get to 25%? Yeah, we did. Suppose we can leave that annotated. And that's what I'm looking at. Previous week's high, plus those wicks, and more importantly, this SIBI, which really we should probably just grade that, if I'm being honest. That's more my style. So yeah, 0 is there, 0.75 is there because it's a bearish fair value gap. Yeah, something like that. Values, no prices. If you really want, actually what I like to do is, I'm going to show you guys. I like to just do it with lines and then just annotate this daily SIBI 1.00. Just make it small so it stays really clean. Daily SIBI 1.00. Go here. Daily SIBI 0.0. Lock it in. And then start marking it out line for line. 705. So daily SIBI 0.25. Lock it in. You can make that line blue if you want. I'll make it blue just so there's some color. And then you got daily SIBI 50% level. I will leave this all marked out for next week. Make sure that shit's precise. And then the last one, 75%. I can look at DMs shortly. Yeah, one sec. Daily SIBI 0.75. And let's make that blue. So keeping those levels marked out. See how nice and clean that is? As opposed to just marking out the quadrants. I like to do it like that. The quadrants can get real messy. Remove the price labels. And then previous week's high. Because it's a draw, I like to make my draws on liquidity like bolded. 2 bolded lines. So you can see that very clearly. Yeah. So these are the levels I have going into the week. If you want to like grade it like this, you can. I'm just gonna do it like this for now. And I'll be bullish personally, yeah. You could also grade this if you wanted to, because we may open lower and trade down into that. That's possible. Can you explain high probability fair value gap? What does that mean for us? I can tell you what ICT said, and that's if a fair value gap overlaps with a quadrant in inefficiency, that's in discount if you're bullish and premium if you're bearish, that's a high probability fair value gap. That's exactly what he taught. Now I can just copy and put everything into ES very easily. Damn, look at ES, 0.75% new week opening gap. Yo, that's clean. That's real clean. Previous week's high on ES. It's right here. You really gotta leave these levels on ES as well. And then the daily SIBI. ES has a volume imbalance in there? Interesting. I wouldn't use the volume imbalance because NQ doesn't have it. So I feel like I wouldn't want to use that. Let me just put prices here and then I'll start answering questions and shit. 736.25, 736.25. I gotta just make these labels. I'll share the chart with Discord. That's 748.50. And then 7375. 7375 right there. Let's lock those levels in. Lock them in, lock them in, lock them in. And then we have the very easy ones. Daily Cibi low. Daily Cibi high. So that's all locked in. Lock that in. So now if I delete, see, this one was forgot. But now if I delete my chart, none of these levels will get deleted. Perfect. What we have to do is delete the price labels. Perfect. All right. Are you calculating compounds with those lines? What do you mean compounds? Like adding to a trade? Perhaps. It's possible. You can think of it as pretty much using them as support and resistance. You know, as long as everything aligns with narrative and such. That's pretty much what it is, if I'm being honest. Personally, I think we're going to go higher, but I'll wait for previous week's low to be taken first. So you think that we're going to go like this. Fuck, you were live. You didn't miss much, to be honest. I'm just grading the NASDAQ chart, prepping the NASDAQ for the week. And S&P 500. Does it seem to work? Yes, but I don't know how practical it is. Because by the time you find the one that's being respected, you're done. Like, the trade's gone. Especially if you trade the 1 minute chart. Personally, I think we're going to go high. Will you be waiting for the higher low to be taken for opening position? Going into Monday, my bias is neutral. But I will be looking for longs. Most likely on Monday. Unless we open up, like, lower. If you put that Friday range, 50% buy, they're closing with 50%. Yep, you can look at Friday's range. I personally would like to see how price closed on the previous week discount wick. Previous week discount wick here. I don't think we're gonna get there, personally. Yeah, I know about previous Friday's range. You can grade that as well if you wanted to. ICT did. What I think about ICT? Yo, this shit is hard to backtest. I'm gonna be honest. I think the main things we're gonna use is one, the lookbacks, two, the dollar, and three, something which I've already been using, so it's not really much to consider. And that's just the opening range gap quadrants. You know, that's it. I was already always using that. Yeah, can you share my picture I sent on stream? Yeah. You send me a message? Alright. Let's look at this guy's stuff. Picking the right wick takes some time, but it's there and it works. Yeah, I mean, I see the wick quadrant there. This inversion for value gap. Yeah. This one wouldn't count. This one doesn't respect it, but doesn't hit the stop there. What I'm trying to say is it's not about selecting the right wicks and not. But what I'm trying to say is if dollar goes down, it's risk off. Yeah, exactly. ICT said to use the longest wick when you got the multiple to choose from and to not use two wicks that have overlapping levels. Go higher? Yeah, I'm bullish personally. ICT said to use the longest wick when you got multiple to choose from. And to not use two wicks that have overlapping levels. Did he say to not use them or to just... Let me go for example here. Like, for example, like here and here. Like, don't use these because they overlap. The thing is, he doesn't always use the longest wick, though. Like, that's the thing. Always just use the longest. Yeah, the longer one to the left. I get you. I get you the longest one because it's going to trade into that one first. Makes sense. Makes sense. But you would use this one. But then, like, he doesn't do that, though. No, you mark both and take the gaps between the overlapping ones. That's what ICT taught. Yeah, I don't think he said don't use the overlapping ones. I think DXY will go higher this week. CPI on Friday, major manipulation throughout the week. I don't know. You can argue for a shorter one if it trades into it first. Whichever one you trade into it for. He said in the 18-minute lecture from this week. Yeah, he said a lot of things, man. I'm gonna be honest. I feel like he's said a lot of things that kind of contradict. Makes it difficult. He also said just mark them all, and the one that it respects is the one you use. If you take a trade-off one, she's not just like, that's like, I don't like that. He said grade all of them in his most recent video. Yeah, you're right. He did say that. He did say grade them all. ICT said that he only used that lay on top of a quadrant. Here's my issue, though. Here's my issue, Sieb. Here's my issue. If you mark out, and there's no criteria like don't use this wick. Okay? That's my issue. There is no don't use that one. Okay? So if you and if that's the case, if there is no do not use this wick, then it's pretty much impossible to do this consistently because there will always be a wick within the last 20 days that overlaps with a PD rate at the right time. There always will be one. Video title, his most recent 2 live streams. Just use the longest. I don't know. Let's go back to some of these days and see if there's setups off of the wick levels. There's no overlap here. 2550, you can use any PD rate, only narrative matters. I'm not ignoring your messages. I don't know what you want me to say to that. Just focus on the ones that you should use. First, the one decided at the 20 range, then the longest one, then make sure you don't overlap 2 wicks, and then keep in mind the previous daily wicks. I don't know. I don't like that criteria, personally. Yeah, we can do that. Let's study this one with chat. I don't know. Me personally, I just don't like that criteria because there's always going to be a wick that overlaps. There's a lot of setups that play with no overlap. Okay. We're going to study this because at this point in time, this is the most obvious wick. There's literally nothing else. You can argue this. We'll use both. Okay. We're going to make one red. We're going to make one blue. There's no ambiguity. There's literally... No, but there is. Because what about this one? Alright, we're just going to focus on this one for now. And then don't even get me started with like, oh, you can go on the 5 minute or the 4 minute and 3 minute and then 2 minute and then 1 minute and see which one it respects. Bruh. If you go on all the time frames, I'm sure one of them is going to respect. Can you tell the ChatGPT method? Longest one always. I don't think that's true at all. He did say that at one point, but that's not what he's been teaching. Well, this quadrant would be the 20-day IFTA look back. That's different. That's a different thing. Wait, don't I have a thing for that? Use that one and two. Yeah, this is your 20-day IFTA look, right? This is the day 20 days ago. That's this. The highest high is there, lowest low is there. This is your 20-day IFTA look back. He's saying to use just Fridays, but I would use this personally because that's the 20-day look back. I don't know why he would not use that. That's the highest low, lowest low in the last 20 days. So, like, see, wouldn't you want something in right here? All right, let's study it. We have the daily wick. Right into it there. Body's respected inside that fair value gap. This is all like Asia stuff. I think let's go to the 15-minute chart and just skip this shit. Let's see. I mean, I'll be honest, like this 15-minute fair value gap overlaps perfectly with the narrative that we sweep out sell side here. But is there a setup? Like, see, it doesn't overlap though. That's the thing. So then what? Is there no high probability fair value gap in here? Like, for example, okay, we're looking at this on Wednesday. We come down, no high probability, no high probability. This one, this is the high probability one, I guess. The bodies do respect. Actually, no, it doesn't. It inverses. That should be your high probability fair value gap. Yeah, but see what I'm saying, Siab? So, Siab, if that's the way you want to say it, then there's like a million high probability fair value gaps. Because you can just go to every single time frame until one overlaps. Right? You can say this 2 minutes a high probability one. Obviously, narrative matters. If you're looking for longs, that 15... I guess this one is key because it's 25%. You don't want to see it reach 50. So I understand that that one's key. But you want to combine this with time. This is freaking 1:15 p.m. 13:30. Nothing clean in here. I gotta argue this. It's not really anything too clean here. And then it just goes. Does it come back? That's what I'm saying. Opening range gaps, man. Opening range gaps is the fucking method, bro. Like this is all you get in that wick. What, this? Yeah, see, now it's on the 1 minute. Now it's okay to be off. Well, I thought this was supposed to be insanely precise. 3 minute. First one after reversal. This? This is not high probability. It does not overlap with a quadrant level. It would have to go through 25 or 0. Oh, as long as the second no, I remember that. You're right. As long as the second candle, the fair value gap goes through the quadrant level. Is that what it says exactly? Yeah, you're right. It just has to be the second but this is like yeah, bro, this is 1:20 p.m. Bro. I don't know about you guys. This shit looking like price only, no time. I don't know who the hell's longing at 1:20. I guess PM session does start. Like, you you think I'm gonna stand here, wait the whole day for 25%, and then this fair value guy, bro, never. Like, what am I supposed? You see what I'm saying? Like, how practical is this? By the time you open up the chart at 9:30 and you're looking for a setup, like it's donezo, bro. I think what matters most is the wicks that form right now. To me, that's crucial. Like this one. This one matters because I'm not expecting that wick to get overtaken. So, like this inversion fair value gap is probably really strong, I'd assume. And it's inside the macro. See? Take out the buy side. Because it's like right now, you know what I mean? Like what I'm trying to say is if we're bullish and we just now put in this wick, which means you're not expecting it to come here, right? You're not expecting it. This is probably the most relevant price action. You want to find your next long somewhere in here. Ideally, somewhere in here. You know? Isn't that the most important than like some fucking daily wick from like 7 days ago that just happens to overlap? Study Friday with October 14th discount wick. Okay, we can do that. I mean, yeah, but this is... I'm not going to say it's cherry picked, but ICT did go over this example. And... like, I already went over this in my notes. I have notes. But then, like, so then what? You just ignore it? On Wednesday, I guess you have that one setup. Let's study it on Thursday first. Let's go to Thursday. Because Thursday also traded higher. Let's study Thursday first. We already know Friday was clean as hell. We already know that. I mean, okay, this fair value gap, right, crosses the border at 25. Respects. Plus an inversion in there. That's a high probability entry. This short. You know what else you could have done too? This wick. And looked for shorts on Thursday. Let's go study that. That's what we should study. So here we break below. Yo, this fair value gap. 11:38, bro. If you think I'm shorting a fair value gap at 11:38 a.m., you're out of your mind, bro. 11:30. If that was 9:50 macro, valid. You guys want to see what 9:50 macro did? Look at this shit. This is 9:50 macro right here, bro. But to be fair, like we had a large move overnight, so. Instant funded accounts, that's not bad. Look how many times we turn to the daily SIBI and we have to treat the wicks the same. No, you're right. You're right. It's all about narrative and when you would expect the wick to be respected. I understand that completely. We're not even backtesting. We're just kind of studying. And then there's this fair value gap, but this is like market close. We're not using that shit. I think the best study is the one lower. Okay, if we want to go right time, I mean, this is the short that I caught. This is the short that I took. I took this short on Thursday from here to here, and there's no overlap really. I just shorted this OB. Yes, the OB overlaps. I guess. I don't know. I feel like there's better ways to look at it. You know? Can you study first presented city and BISI? I'm gonna be honest, bro. That one's a really easy one. It's not limited to 1 PT. But did you get what I'm saying now, though? Like now it's when there's so much room for variety, it's almost impossible to do this consistently and accurately. It's almost impossible, bro. Especially to do it live market and execute at the right time. You're not going to be able to. Like, I'm not convinced. I'm not convinced. Sorry. I'm not convinced. There's always going to be an inefficiency quadrant level that overlaps. Mark the SIBI, which aligns with 0.0. Bro, that's what I'm saying, though. There's no way. First of all, this SIBI gets invalidated. Let's say you want to do it like this. Sure. Let's just say. Time. 1:40 p.m. Eastern Time. I guess. 1:30. 1:30 open, I guess, bro. But all I'm trying to say is, isn't there such a better way to look at this? Like, wouldn't you just rather say like this is an intermediate term high and it's 1:30 and it's PO3 range expansion down? That's what I shorted. For me to be like, well, look at this SIBI that overlaps with this quadrant. That probably might hold, but if it's not this quadrant, it's another one, which also might hold. But if not that one, then probably this one. Like, I just don't think it's a practical way to go about trading, you know? I'm not saying it doesn't work. I'm just saying, how practical is this? Can you really actually use it while it's printing live? ICT says he has just all of them fucking marked out on his notebook. No, I get that it works, yeah. I get that it works. I don't disagree. I'm just saying I don't think it's practical. I don't think it's, at least maybe not for me, I don't think it's the right way to go about it. Yeah, the notebook shit is crazy. Grade the daily fair value gap. We already studied the daily fair value gap. I mean, I like this city here, but this is 1220. Delivers such a nice price run. I'm not saying it doesn't work. I'm just saying I don't think it's practical. Unless 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 you can actually develop a system to say use this wick in this instance. You know? 1050 macro October 3rd wick. See, bro, I just feel like that's so cherry picked, bro. Like, we're ignoring all the examples that failed. What about all the times it didn't use the quadrants, or all the times where the macro did nothing inside the quadrant level when it overlapped, right? Like, look at this. Look at this. I'm just saying, the way ICT talked about it was like it was perfect every time, every single major price run. Let's look at this, okay? This is a premium wick. You know what? I'll even add the daily fair value gap on it. Just look at this. Okay? It doesn't get more accurate than this. Daily fair value gap plus the longest wick the day before. No one can tell me that's not obvious. It's the day before. I'm talking about this day. Okay? This is the day before, right? This is the day before, and this is the daily fair value gap we're trading in. This is what you use, right? This is what you use. Let's go back and study on the premise of time, okay? We consolidate the entire opening range, then we go higher, way past 100%, okay? Sure, you can argue there's some sensitivity there, okay? Then, where's your first quadrant level overlap? That would be right here, okay? Or actually, if we want to go even earlier than that, we take the lows, then we get this fair value gap. You could argue this fair value gap overlaps because of the wick here. We trade into the fair value gap, this inversion fair value gap overlaps, plays out to the high, and then we break below. This inversion fair value gap overlaps, although we don't trade into it. Then we break below. This fair value gap overlaps, gets inversed, but doesn't take out that high. This fair value gap overlaps, gets inversed, goes down. This fair value gap overlaps, trades into at 1140. But what about all the times it fails? I mean, this day is pretty good though. I ain't gonna lie. I ain't gonna lie. This day looks really fucking good. First presents in fair value gap. He definitely has released that. What do you mean? Search it up on X. Why would I search it up on X when I've seen every single ICT lecture? Yes, he said they have to overlap with time. Alright, someone else has a study for us. This wick plus the daily fair value gap. Okay, that's what I have annotated right now. High probability fair value gap. Okay, let me see this. Okay, so wait, let me see. The black is the daily SIBI. What's purple? Oh, black is daily SIBI, high and low, and then purple is the quadrants, and then red is okay. So here we trade to the low of the SIBI. That's a high probability fair value gap. But see what I'm saying? It inverses here and then fails. Why are we only gonna use it? Like, we're only looking at the examples that play out. Here, the fair value gap inverses and then fails. Okay, sure. Then it inverses again and plays out. Reclaimed bitty. Sure. Okay. This fair value gap also overlaps. We don't trade into it. Right here. Okay. This inversion fair value gap overlaps. That one gets traded into, so that's good. So this makes sense, actually. I like this one right here. This inversion fair value gap, really nice delivery. This is high probability, yes. We trade higher. This would be high probability. Yep, it's a BPR because of this. Then we work in that upper quadrant. That would be high probability, yes. That inversion would be high probability. This fair value gap will be high probability. This fair value gap, again, doesn't get traded into high probability. This one would also be high probability because it trades there. Every fucking fair value gap is high probability, bro. Literally, is there a single one that isn't? This one, I guess. Makes sense. Although it does deliver. The quadrant line has to be in the space of the FEG. Cannot be on the wick. It has to be on the second candle, no? ICT took this day short at the high usage. So yeah, correct. It just has to touch the second candle. It just has to touch any portion of the second candle. This one would be high probability. What I want to see is the high probability ones that fail. To be honest, there aren't many, bro. This one's high probability. Inversion. Fails. See, this one fails. The second candle of the fair value gap. As long as it touches a quadrant level, it works. You also want to look at which quadrant level too, right? If you're bearish, you want to be shorting in the lower quadrant. You shouldn't be trading all the way up here. Yeah, you can't ignore liquidity sweeps, of course. But what I'm trying to say is, let's find another day this happens. Oh, one more image. Yeah, these are high probability, but so is this one, and that one fails. But I guess it's fine because they're both. This one, yes. This one too. Okay, London lows. I like that. You're using the reclaimed imbalance. I use TradeZella. Dion says, I think the actual gap has to overlap with the quadrant, not just the second candle. That's what I thought. That's what I thought. Do you guys want me to pull it up so we can fact check? That's what I had in my notes. Let's fact check. Let's fact check. We'll fact check right now. It's no big deal. We don't even have to. Let me get my earbuds in. Was it this video?
ChatGPT is good for.
Was it this video or was it Hold on, I know exactly where to go. Hold on. I know exactly where to go. Okay, it's right here. Everyone listen.
Fair value gap. What was dropped on top of that? What's this? Isn't that a bullish fair value gap? See that? The market drops down into it, gives you institutional order flow entry drill, which is a partial fill of the gap. It's a high probability fair value gap because it's laying over top of.
Can I just say, ICT always says time when it doesn't work, but then when it works, he never says, "Oh, bro, this shit's 11:40 a.m." What? Who the hell be trading 11:40 a.m., bro? Like, it's always time when it doesn't work.
What do I?
Like, if it fails, he's like, "Oh, you gotta use time." But then every time it plays out, lunch macro, bro, that shit is not lunch macro. That shit 11:40, bro.
Okay, this is the last thing I'm gonna teach, and I'm done. If this,
all I'm saying is, every time the setup fails, he says, "Oh, you have to use time." But every time he gives us an example, time is not really like in play. It's not a macro. We saw a huge run before.
Say this is
I
your
don't know.
candlestick, okay?
Let's hear this though. Let's hear this.
It's a bullish candle.
This is the part that we need to know. I just wish he was more consistent in his teachings. That's all. I don't think they're wrong. I mean, he has 30 fucking plus years experience.
Right. And you have a
Who am I to say
quadrant
he's
level.
wrong?
And the next candle that's immediately formed after this one does this. And the candle prior to this one looks like, oh, I don't want to do that. Just one candle.
Shit ass drawing. So see the quadrant level here goes through the gap.
Pay attention to this part, okay? I promise this is going to clear a lot of your confusion up.
Okay.
If this is the quadrant, you want to see any portion of this candle that makes the actual gap or the fair value gap, it needs to be laying on top of this line. So you would naturally have it viewed like this.
He said any portion of the second candle.
And
That's what he said.
so that's your normal ICT bearish, bullish fair value gap. Okay, crude depiction, but it's accomplishing the method. So in here, you know, this will be a high probability fair value gap if it trades back down into it in the future.
Speed meets skill. Introducing Funded Next Futures Rapid. No daily loss limits.
I always get this ad, bro.
Consistency rules. Designed to fast track. You pass the challenge in just one day.
If we see a
That's profit from Alpha Futures.
quadrant.
Okay, look.
Like that,
what about the wick though?
this is not a high probability fair value gap. Can it be used? Yeah, it can. I'm not going to use that one myself. Okay. If
They didn't
this
mention the wick.
quadrant looks like that,
Wait.
that is not a high probability fair
See, Sieb, you were wrong. It has to cross the actual gap.
value gap by my terms.
There you go.
So
that was it right there.
Fair value gap. It's just the common gap. Common gaps, they can.
The quadrant has to lay on top of the gap. Yep, that's what I had in my notes too.
And it can fill in. There's 50-50. I'm teaching you my language to determine that if the quadrant is like that, right on the low of the fair value gap, that's a high probability fair value gap. If it lays just on the high,
I tried to ask him questions. They didn't let me talk in the second half.
That's a high probability fair value gap. Why?
I want to talk so bad.
The candlestick that creates the fair value gap in and of itself, that range,
you're fine, Sieb. We're all learning, bro.
over top of and crisscrossing like a crosshair on the sniper rifle. That is where you're aiming. You see that? Big light bulb moment. Okay. So anytime someone tells you oh yeah, he has all these fucking lines on a chart, when it's going to hit something eventually. Yeah, it's going to hit one that gives you the theory that I'm teaching you. And then when
it's talking about us right now.
Matches during a time window, open. Okay, if it's in the first 30 minutes of the opening range in index futures.
Oh, the fuck!
And it lays on top of a quadrant like that, man, that's high probability. Huge probability. If this happens to be the first percent of fair value gap and it's laying on top of a quadrant of the opening range gap, new day opening gap, new week opening gap,
how many there are though,
or close proximity candlestick premium wick or discount wick, and I taught you how to find them. Looking at the daily chart over here, see, I'm going to teach you more shit.
Listen to this.
When I do pre-recorded stuff, I have a very specific set of information I want to cover, and I get done. I don't go on and on and on. But I'm like a fucking encyclopedia, a fire hose that just can't shut off.
This is from the live stream.
And I know you love it, but I'm never going to get what I want to get done now. But this wick here is the highest one of all these. So you want to grade that one and carry it forward and watch how price is utilizing it. And I'll show you what I mean.
You didn't say that.
This is the last thing I want to talk about. I have to get off here.
Yeah, he did say that. But he's also not
You
done that
appreciate
before.
the
Is the
time
point
and
I was trying
energy
to
and
make.
effort I'm trying to put into you. Proving this stuff is working scientifically. It's not bullshit. It's not.
But
It's
I
not
can
guesswork,
understand,
folks.
like, I think he's trying to say, like, if you have, like, a bunch like this, just use the highest one. If they're stacked like that consecutively. But if there was, like, a long one here and a long one here.
Okay, I don't cherry pick anything. I'm waiting for my shit to line up on time. And when it does, then you get to see the results of it.
Yeah, that
And
changes
nobody else
things,
can
yeah. That
replicate
makes it a lot more precise. Or
At
quadrants
least for
count.
right now. Nobody else is this profitable, this perfect, this precise. They're not. But I have students that are doing exceptionally well. And lessons like we've done this past month is going to help them go into the upper
I'm gonna get
echelon
some
of
fucking Chipotle, bro.
wildly precise and profitable. All right, so here's the opening. And I'm going to change.
He made it purple.
So we have the low, which is the open of that candlestick on Thursday.
It's so simple when he
comes in
does
at
it, I know.
24,937.
So sad, bro.
All right, 24,000. That's right here. All right. And I'm going to take the opening range.
Bro, you're telling me he dead ass writes all these levels on a fucking paper and pencil and then executes it at the perfect second or minute that it forms? How does he do that fast, bro? How? Like, that requires some insane speed, bro. Does he have like
Sorry,
what?
That's things on it. So these are your quadrant levels. Lowest one in here.
Bro, he can barely see it and get it when it's on his chart max bold, and he still's like, which one is it? Like, so how the hell is he doing that shit on paper and pencil, bro?
No gap. That was immediate rebalance. And here we have fair value gap. There.
Yeah,
and
see, look at this shit, bro.
220. Is that the right time?
He finds a fair value gap, and now he's like, oh, it's not the right time now. Okay, what about all the times it does play out? Like,
is that a time that I teach you to use? I know there's a lot of people out there teaching all kinds of weird shit, but that's not what I teach.
So I guess what he's saying is like, the time the fair value gap gets traded into is what matters.
So that is not the right time. That fair value gap, you would carry it forward. Okay.
You can't tell me that
the next game.
Listen, you can't tell me that doesn't seem cherry picked as fuck. It looks like he was doing the example and then realized like, oh shit, it inversed. You know? But okay, now that we have our new criteria, which one of these is actually high probability? Let's go back. Which one of these is actually high probability? Okay. This one. Okay, this inversion fair value gap is. It overlaps right there. Okay. There's a bunch in here. Okay, we're not gonna we're not gonna talk about this one. This one got fucking ran through, bro. That shit overlaps right there. This one got fucking ran through like 12 times. So basically we're looking for fair value gaps where there's a blue or red line right through. So not this one. This one right here. That inversion, high probability. Yeah, but consolidation. Alright, bro. So what is this, bro? So we're literally, bro, what you're telling me is we're literally only looking at the ones that play out. That's not consistent. You gotta also look at the ones that fail. It's consolidation. It's 950 macro, bro. That's like prime time. Like you're telling me we're gonna use this one at 11:40 a.m. This one also failed. What's wrong with this one? I guess there's another one right here that's high probability, so it's fine. These are both high probability ones. This one is also a high probability one. This one also is a high probability one. Trades into it there. This one is also a high probability one. But it fails. But if you wait for the right time, it's not the right time. The macro starts over here. This stream will be on YouTube if you want to watch, yes. So how do I want to do this? October 1st discount wick. Alright, bro. You've been asking for a while. Let's do it. October 1st discount wick. Okay, I can agree it's the longest one. I already did this study. And you want to watch it on this, right? On this day? I am live every day except weekends. Which day do you want to study, Sieb? Tuesday? You want to study Tuesday? But like, see what I'm saying? We're gonna ignore everything on Friday. We're gonna ignore. Like, what about? We can't just use the day that works. We got to look at all of them. This wick gets traded to first on this day. That's the first time we go back into it. So we should look at it on this day. Okay. Are there any high probability fair value gaps? Okay. There is this one that's really small. So we can, let's not use that one. It's a really small one that fails. Then we go up. We take out the high 1150 macro. Okay. 1150 macro. And you have a fair value gap overlapping right there. That gets respected. I'd say better yet is this inversion fair value gap, personally. You also have this fair value gap. Again, this is 1230 though. This is literally lunch. Like, who the hell is shorting this at 1230? No one is shorting this fair value gap at 1230 ever. Like, this one overlaps perfectly, but it's 1230. That's not time. That's not what we would use. Like, there's nothing in here that you would use. We can argue. Yeah, exactly. Yeah, we could argue like Friday was super manipulated. I guess there's this fair value gap, 1450 macro going into final hour. I guess, bro, but like if every single time it fails, we're just gonna make an excuse, then how really precise is it? Okay, let's check this day. This is the next day. This is the next day. This is Monday, October 13th. We're trading back into the very obvious wick. Okay. Okay, here we have a very high probability fair value gap. Overlaps right there. Respects, delivers the buy side. That's very nice. Right? That's very nice. There's nothing else in here. And that's pretty much it. I'm going to be honest. That's first presentation. Does not overlap. Like, that's it. This is the only one. And it plays out. We took sell side, bullish fair value gap, I guess. This is first presentation. Does not overlap. No, the gap has to overlap, Sieb. The blue line has to go through the gap. Oh, you're talking about the volume imbalance. Uh-huh, I see. But even then this shit failed, bro. This is supposed to be high probability. Comes here. I guess it never inversed. It only inversed here. I know, bro. But again, with the mohawks, it's always precise. But if it's not precise, it's just a mohawk. How does that help us, bro? How is that practical? How is that practical? We come back down here, trade the first presentation. I mean, you could argue this is really like A+, this one specifically, this example. I think it has to go through the gaps, yeah. It has to go through the gap. You can see first presentation being used here. Alright, once we inverse it, we come back, trade to the low, and then we reuse it. And that's pretty much it. He said you could also use it like an extra time, so like, I don't know. Alright, let's do the last day. The next day. Okay. So we'll just stick to after 9:30 like we've been doing. See? I mean, there's this fair value gap here that overlaps. Doesn't really get traded into. There's this fair value gap here that overlaps. Respected there, inversed, reinversed. Sure, you could argue it, it needs to trade down here. Trades back into it here. 11.20, not really significant. You have this one that would count because it's at the low. Actually, no, it's not. You would have this one. Look, this would be a high probability one. Fails. Would definitely stop you out. No, it's not. I'm not even heated at all. My bad if I sounded heated. I'm chilling fully. Like, I'm just... There's this one. Again, this one's at 12.23, bro. 12.23, no one's touching that one. No one is touching that one. Oh, you got heated? There's this very nice one, but it's 15.30. I don't know. I think my answer, my final takeaway. This is my chart for the Nasdaq, by the way. So if anyone wants my levels, I don't know if you guys want that shit, but these are my levels. I'm gonna be using this live will be posted. Yeah, I'm gonna be using org and dog and wog opening range. Same shit I'd always been using. So I'll pay more attention to the high probability fair value gaps that overlap with my levels. Gotta use high probability FG plus OB and see how it delivers. I will do it with org. Yeah, did you send it to me? Can you send it to me? We're going all time highs? I think so. 3 seconds. 1 Mississippi. 2. Yeah, what should I eat today, man? I'm about to fucking feast. I'm so hungry. I'm gonna eat something. I don't know what it is, but I'm gonna eat something. Just finished these thesis for my courses. I say it was so long. W. Sunday evenings seem easier to trade most than other times. Become the world's best Sunday evening checker, brother. What's your favorite food? Yo, what is this scam, bro? You didn't post shit. Let me make sure this shit's like okay to put on stream. Bro, I don't know what this is, bro. You didn't send me nothing. What do I think will happen at market open? Depends what happens at 8. It depends where price is at 18. So really you just want to follow. That's what's really going on here. That is what's really going on. I'm gonna be honest, I gotta follow you on my phone. 1 sec, bro. I'm not logged in, and I don't know my login, and I'm signed in on my phone. You banked the 130 point move, that one? Which one? The BCC aligns perfectly. That one? Let's see this. I'll just send myself the picture. Okay, so you're saying, yep, exactly the quadrangle overlaps. Dimension block and dog. What's your question? 3R consistently a week. That's really good, bro. Yeah. Search trades don't lie on X and watch how he mentions using both first presentation BC and first. I don't know who trades don't lie on X is, bro. Did you take a look at the weekly BC that was tapped? No, I think I forgot. Are you gonna trade the open? No. What's all those lines that are on your chart? Uh, Premium and discount wick quadrants. Yo, do you have an end dog indicator? Does this shit work? Yeah, this end dog's clean, bro. Does anyone have a really good end dog indicator? Someone just send me theirs. If you could just send me a message on Discord, that would be wonderful. You said end dog by Fatty? Fuck. Huh? Mm, yeah, you definitely need the right setting. Ah, fuck. I'll do that shit later. I don't want to do RTH. End dog ETH. And walk. I don't need a ramp at Horizon. Alright, those settings are fire. Is this accurate? Effect Horizon is. So this is good. Is there any way I can change the title? Because I don't like that says Ndog ETH. I don't know what that means. Every Ndog is ETH. I guess you can't really change the title. I like this one. Hey, where'd it go? Do you have the setting that's like every single one or only like current? Which one? Like, oh, shit. Will you be trained tonight? No, I'll be trained tomorrow morning. I'm gonna let overnight do its thing. Why is this background purple? It's Event Horizon. NWOG label. I don't need that. Oh, Ndog ETH. I disabled it. I'm tripping. Yeah, send me your settings. And I'm going to make this so it's only visible on the 1 minute chart. Minute chart. Pretty cool. I like that. I like that. I like that. Why is this one green? Why is that label all the way over there? Hold on. Some of this shit is weird, bro. Yeah, just send me yours, bro. Send me your settings. Anyways, boys, I appreciate you guys coming through. We had a lot of work. We've been live for like 3 hours and 30 minutes. I'll probably do more work tonight, but I'm gonna go get some food because I'm really hungry. These are my levels going into the week. I'll figure out the end dog indicator. I appreciate you guys. I love you guys, and I'll see you guys live tomorrow, 9:15 a.m. Eastern time. See you guys then.